Hi everyone, welcome to today's segment of Market Breakdown. Yeah, it's episode 4 already. But before getting into the nitty-gritties of today's video, I'd like you to do me a favor, which is subscribing. Actually, you're doing yourself a favor as well, which is subscribing to the YouTube channel. Drop me a like and also do well to drop a comment in the chat box whenever it is that you're done with the video. You can also suggest me a pair that you'd like me to look into, and then I'll break it down and drop the analysis so that we can together profit from it. So, like I said earlier, do yourself a favor by subscribing to the channel and kindly do me a favor by hitting the like button so that the YouTube algorithm can um recommend the videos to other traders as well. Okay, so let me give you guys time to do that. Okay, believing that is done already. So we're going to be moving into today's episode of Market Breakdown fully. So today we're going to be looking into S&P 500 and US30. So those are the two pairs that we're going to be looking at. I should have been able to drop a video earlier on the pair. I actually made a video on it, but then I got busy with some other offline activities till it actually played out to the current place where it is. I was unable to drop the video for you guys. So now I have to make another video on the current market price where it is, and then let's see if we can be able to also profit from these as well. So currently, standard procedure, as you guys already know, the way I trade. If you've been following this channel for a while now, you know that what I do is a it's called an multi-time frame analysis, something which and what do I mean by multi-time frame analysis? Just you scaling, going from one time frame to another time frame, which is just like a top down approach to the market. Now this entails that you go from the monthly time frame to the weekly time frame to the daily time frame, and then you pick your entries from the 4 hour time frame or the 1 hour time frame. So with that being said, we're going to be looking into the S&P 500, and I'm going to be removing some of these tools because I don't like my chart being rough. I don't like my charts being rough. So I'm going to remove some of these tools, and then I'll make everything look more clean, and then I'll start the teaching for you guys. I'm still going to bring them back because some of them was going to be needing them in the course during the course of the class, but for now we're not going to be needing it. So if you look very well from on the S&P 500, you're going to see that the S&P 500 chart has been on in an uptrend since like around 1980 something or thereabouts, or 92 or thereabouts. The S&P 500 has pretty much been giving us a higher high, a higher low. Not looking like a higher high, looking like an equal high. Give us give us an equal low as well. Then proceeded back into giving us a higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and now we're expecting again for the market to come and give us a another higher highs, or even if the market wants to now decide that it's not going to continue in an uptrend, it at least should come and give us an equal high before it now breaks back below and then start a change in trend. So for now, the S&P 500 S&P 500 structure is actually bullish from the monthly time frame. So now, with that being said, we're going to look back into the current price action. We're going to look into the current price action and then see what S&P 500 is printing out. And if we look into it, we're going to see that we have a first touch of a trend line, a second touch of the trend line, and now a third touch of the trend line. Now, the market is actually remaining 5 days to close. And now, with 5 days remaining for the market to close, we now have a morning star forming at a level which is also corresponding to which is also corresponding to what's it called? Which is also corresponding to the third touch of the trend line on the monthly time frame. So and that means another confluence to the upside. That is indicating another confluence to the upside. Now our target, like I said earlier, is going to be at this blue region, which is at least, even though the market now decides that it's not going to continue in an uptrend, the market should at least come to this 100 level retracement, reach here, then the market can now decide to break below this trend line, pull back into it, and then now move into a downward momentum. But for now, the S&P 500 structure on on the monthly time frame is still bullish. It's still very much bullish. So with that being said, we're going to be moving down to we're going to be moving to the weekly time frame. Like I said earlier, what we're going to be doing here is a multi-time frame analysis, which is we're going to be breaking it down from one time frame to another time frame, so that's to give us a clear information of what the price action is saying, and then go to the lower time frame to make use of this information in our trading. It is on the lower time frame that we're going to be picking our entries from. So with that being said, I'm going to bring back my tools that I removed earlier because we're going to be needing it as we scale back down to the lower time frame. So now we were on the weekly time frame. We're on the weekly time frame. Still going to be removing some of my tools. I'm going to be bringing them back later on, but then for now, I'm going to be removing it. For now, I'm going to be removing it. Okay. So this one's, this looks clear enough. Now this is looking clear enough, and also this looks like it's giving us a lot of information actually. So now, like I said earlier, but then there's a slight difference on the weekly time frame, which is that we have here a first touch, a second touch, and the standard procedure of price action trading states that whenever it is that you see a third touch on a trend line, there's a high chance that the third touch is going to give a massive move to either the upside or the downside, depending on where it is that the market is heading to at the time. So now we have a first touch, we have a second touch, now we have a third touch of the trend line, and the market has actually given us a massive move also to the upside. But then if we look into the price action again, we're going to see something that is looking like an inverse head and shoulder pattern. Now, an inverse head and shoulder pattern, as you guys know, is a bullish reversal sign. Just like I said, that if the market comes here, the market can decide to turn and then forming a double top, and then decides to now start creating a series of lower highs, lower lows, lower highs, lower lows, which means the market structures now wants to start changing into a downward, into a selling momentum. So now an inverse head and shoulder pattern is an inverse of it, which indicates a move to the upside. Now, although this market has been in an uptrend already, but then the market actually came here and then give us a uh, temporary bearish momentum. But then when the market give us a temporary bearish momentum, in order for us to return back into the bullish trend, the market needs to give us a sign, a confirmation, or a chart pattern that indicates that this market is now about to move back into a bullish momentum. So now we have the left shoulder, we have the head, now we have the right shoulder, and even within this inverse head and shoulder pattern, we still had another double bottom, which is also an indication to the upside. Now I'm going to be bringing back some of my tools because gradually we're now going to be needing them. Gradually we're now going to be needing it. Okay. Now if you look deep into this, let me zoom out very well so that you guys can be able to see what it is I'm trying to explain. So if you look very well into this, you're going to see that the market actually broke out of the neckline. Now the market has come back to pull back into the neckline. Now the neckline is matching with the touch of the trend line and also a base, which is the neckline itself. It's a base. And also there's another confluence to the upside again, which is a Fibonacci. If we look very well, I think there's a Fibonacci play here. Let's draw our Fibonacci from swing low to swing high. So yeah, there's also a Fibonacci play that is pushing the market to the upside. We have a swing low to swing high, and then the market came into here. So we have trend line pushing the market to the upside. We have a support here pushing the market to the upside, and then we have a Fibonacci support also pushing the market to the upside, which means this bullish momentum is still very much valid. It's still very, very much valid. Although the bullish momentum is valid. Now, yeah, the bullish momentum is valid, but then there's something going on the S&P 500 that you should look at very well before you now start jumping into trades, which is that if you look at the momentum from here to this very point where the market is, which is heading for this target here, if you look at the momentum from here to here, this move has been linear. This move has been very, very linear. And then the thing about linear moves is the thing about the market is the market doesn't move in a straight line. The market doesn't move in a linear form. The market doesn't move in a linear form. And because of this, I'll be expecting the market to, before the market continues to the upside, I'll be expecting the market to pull back to somewhere around here, or even the touch of this what's it called, of this counter trend line. But then there's a high chance that the market is going to be pulling back into this green bar instead. Or you can just draw a Fibonacci from swing low to swing high, which is going to be around here. Like there's a high chance that this market is going to pull back from here. There's a high chance this market is going to pull back from here, because if you have been able to if you had been able to buy the if you have been able to get into the trade around here, this is supposed to be where your first level target is going to be, because this is a strong support, because it's a support that has been plotted from the weekly time frame, which makes it very, very valid, and then something you should look out for and respect whenever it is that you're trading. So now the market has pretty much run into this place. Now what I'll be waiting for in order to be able to get into this trade is I'll be waiting for somewhat of a pullback from here, either to this green bar, or might not even come to this green bar, might not even reach this green bar. But I'll be waiting for something that is going to help me to be able to draw another counter trend line, something that is looking like this. So it is until I now see a bullish momentum break above the counter trend line after the market starts to pull back here. It is until I now see a bullish momentum candle close, either on the 4 hour time frame. Now, I'm defining my entry already, even from the weekly time frame. The reason why I'm doing it from the weekly time frame is so that whenever it is that you're scaling down to the lower time frames, what the market tends to do is that it tends to give you a lot of candles, and because of the waves that are getting too much, it begins to confuse you if you don't have a good understanding of what it is that the higher time frame is already telling you. So you need to have a good understanding of what the higher time frame is telling you. You're not going to make use of we're not going to, with that opportunity, make use of with that opportunity, look for the best entry that the market is trying to provide you. Now, so with that being said, I'm going to be waiting for a pullback from here to either this green bar or anything that allows me to be able to draw a counter trend line. So it is until I now see a bullish engulfing candle close on the 4 hour time frame, that is when I'm now going to be picking a buy at any space from anywhere within this place. So here is still going to be my first level target, or depending on where it is that this market actually reached before it now continues to fall. That is before it now continues to like give us give us before it now continues to give us a pullback for a re-entry. So that's where my first level target is going to be, and then my overall level target is going to be at the monthly resistance, which is here at this blue bar. So all I'm going to be waiting for on the 4 hour time frame is something that allows me to do a counter trend line looking like this. And then once I see a bullish engulfing candle close, just like I see this candle close here, but then I am going to be getting it better on the 4 hour time frame, because it's a smaller time frame compared to the weekly. Now the thing is, I don't pick my entries from either the monthly or the weekly. Even the daily time frame is sometimes, but then the monthly and the weekly time frame, I don't pick my entries from here. I only use them for analysis. I use them to be able to get a clarity. I use them to be able to get a clear information of whatever it is that the chart is trying to tell me. So I now make use of this. I now, with this information, go to the lower time frame to pick my entries. So basically, that's what I do. Now I'll be waiting for a pullback, a bullish engulfing candle close. Put my stop loss below the lowest low. First level target at the 100 level retracement, and then the overall target at the blue bar, which is the next major zone. So, with that being said, we are going to wrap up our analysis for that of. We're going to wrap up our analysis for that of the S&P 500, and then we're going to move into the US30, which is going to be our next outlook for, today, for this episode. So, like I said earlier, standard procedure, you know the way I trade. I make sure I come to the monthly time frame, and then I try my best to look for what it is that the market is trying to tell me. If the market is not being clear, even on the monthly time frame, all I just do is to close my chart, and then know that, yeah, this market is not something I should be trading, and then I wait for the best market condition to I wait for the market to give me something I can very well interpret, and then I interpret it, if wait for the best entry, and then I go in. So now, if you look at the US30, is also giving us something similar to that of the S&P 500, which is that if you look at the structure from the monthly time frame, we're going to see that the market has been forming a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And um and the thing is, you don't want to go against the trend. You don't want to go against the trend. You don't want to go against the trend. So, which means US30 is also in a bullish market. US30 is also a bullish market as well. So now that we've been able to know that from the structurally speaking, US30 is a bullish market, the next thing we're going to do is to look into the immediate price action, and then be able to, with this information, interpret what it is that the market is trying to do next. So if you look at it very well, we're going to see also that this market is trying to give us a trend line formation to the upside, which is the first touch, second touch, and then the third touch. Now the market is currently at the third touch of the trend line, and also the market is forming a morning star as well, with 5 days remaining for this monthly candle to close. So there's a high chance that if this monthly candle closes the way it is, this morning star at the third touch of this trend line, best believe there's a high chance that this market might even break through this break above this major zone, and even continue to the upside, If you want to know how it is I was able to plot this level, because the market has not been able to get there, you might as well just draw your Fibonacci from swing high to swing low around here, because I've actually been trading all these parts. I've plotted this level before all this price action starts to print, because I've been able to make a couple of trades even within this space. If you're my free Telegram community, you would have been able to catch the trade with us as well. So if you want to join the community, for now I can put my link on YouTube, so you can just search for Exodus Trades. You can just search for Exodus Trades on Telegram. So if you search for it, you'll be able to see the community, and then you can join in. Note, I don't send a DM to anyone first. It's open for you to ask your questions. I don't charge any this thing. If you want to sign up for a class, that's different. But for any signals or anything, I don't give out signals. This is just all. If you need a signal, you can come to my YouTube channel, watch it, understand what the next pair that I'm going to be looking at is doing, and then you can trade it with me as well. So, but signals, I don't charge for signals or anything like that. So, with that being said, we have structure bullish, third touch of the trend line, morning star the third touch of the trend line, which is also signifying a bullish momentum. And after the third touch, after the formation of a morning star, the rules of price action states that the next candle, couple of candles that is going to follow is going to be a series of bullish candles. Now, this is now forming on a monthly time frame, which even makes it more solid, which makes it something more solid. So, with that being said, I'm going to leave what the market is doing now on the monthly time frame, and then I'm going to proceed to the weekly time frame. But first, before I do that, I'm going to be bringing back some of my tools so that you can very well understand what everything it is I'll be explaining as we scroll down to the weekly, then the daily, and thereabout. So now, from the weekly time frame, we can see that this market actually came here. Like I said earlier, I've been trading this market for a while now. So this market actually came here, formed an inverted and shoulder pattern. Now, from here, that is when I started trading this market. Traded it here. I was actually aiming for this high, but then I was able to close my partial at this point. Closed my partial profit. Moved stop loss to break even. Market came. Decided it wants to come to fulfill this technical level, which is fine. Now the market has fulfilled the technical level. I was able to draw my counter trend line, and then I said to myself, until this counter trend line comes to break, until I see a bullish engulfing candle close above this counter trend line, I'm not going to be interested. So I saw a bullish engulfing counter trend line. Still, I was unable to get in because I was actually busy with with a couple of things actually. So I was unable to get in. But now what I'm going to be doing is that the way I'm going to position myself now is that I'm going to be waiting for a pullback as well. It's just a similar, like I said earlier, it's the US30 is doing something very, very similar to what the S&P 500 is doing. So with this now, I'm going to be waiting for a pullback from here to either this green bar or anything it is that allows me to be able to draw a counter trend line that is looking like this. So it is until I now get a 4 hour candle close above the counter trend line, a bullish engulfing candle close on the 4 hour time frame above the counter trend line. That is where I'm going to be placing a buy from. Now, after placing this buy, here is going to be my first level target, provided it pulls back within this region. Provided it pulls back within this region, here is going to be my first level target, and then here is going to be my overall target. Then there's a high chance the market might even come break above here, pull back here, and then continue to the upside again. But for now, we have a major level, and then we should respect it because this major level is from the monthly time frame. So what I'll be doing is a pullback, bullish engulfing candle close on the 4 hour time frame, placing a buy here, first level target, stop loss below the previous low, then overall target will be around here. So that is that for for today's market breakdown episode, today's episode of market breakdown. So before you log out of the channel and everything, I'm very sure you've been able to learn something from the video. But before you log out of the channel, I'll urge you to please do well to subscribe to the channel. Turn on post notification. Drop me a like, and also you can drop a nice comment in this comment box as well. You can drop a comment in the comment box as well. So basically, I've been able to walk you through everything it is that I'm going to be looking out for in trading this space. So all I'm looking out for now is a pullback, a continuation candle close. Then I'll be buying. Clicking the buy button. First level target, I've shown you where it's going to be. Second level target, which is going to be the overall target at the major zone. So basically, that's that for today on market breakdown. But again, I would like to repeat myself. Please kindly do well to subscribe. If you can, do well to share the link to your friends so that you can follow the channel and as well learn from it. So that's going to be all on today's segment of market breakdown. So cheers guys. Adios amigos.